Hey traders, Nick Shaheen here looking at another quick lesson on levels and how I say watch levels versus ticks. If I was watching ticks today in Tesla and I had a position that was tight as far as long or short, I most definitely would have been shaken out of it at the wrong time. What do I mean? Okay, so this is intraday Tesla at a 1 minute increment. The stock was doing great. And then it was fading, but within the ranges. And the point starts right here that I'm trying to make. Okay, so out of the blue, it was trying to play with this level, which was pivotal, but that's not the point. The point is this collection here, which was headline hit. This was a fat candle compared to its previous ones. I looked around. It was a Citron headline of somebody filing a lawsuit on their behalf, but that's old news. That headline had already broken out, but the machines see it and they trade accordingly. Then the humans intervene. So the humans intervene and they say, "No, wait a minute, this was old news." All right, and then the stock bounced. So now the battle becomes this versus that. Okay, so when I'm watching this, somebody that didn't know these levels would have been shaken out. And somebody who's astute would have said, wait a minute, this headline is a rehash. And I actually physically said that to people I was chatting with. And then if I said if somebody wants to take along to beat that, this is a buyable bounce. That's exactly what I said. And boom, immediately. So up here, somebody would have seen this. They were shaken out here. They rebuy there. And then suddenly the second headline hits. Somebody leaving the company. Boom, fatter candle. Look at the size. So shaken out again at the wrong time. But if you had your ranges, this would have been an exit point. This would have been the entry point, not the opposite. Okay, so that's for active trading. But this applies over longer, higher time frames. So then the battle becomes, there is a second part of the lesson, which is the same lesson, only redux. So now we had a big candle. Okay, that's a legitimate reason. Another VP leaving. Wow, okay. But the headline we've seen, so it should have muted response. So I said, let's see what they do with it, because they didn't even break this one. On fat volume, I said, I have hopes for it. And sure enough, they took a few minutes, and then boing, they bounced. Now, I don't start chasing here. Here is what I close the longs if I went long in here. And until I see a breach above. Why? Because now the battle, the lines are drawn clearly, short term, is inside this box. So a breach above it usually carries through, and look at what happened. A breach below it usually follows lower. But that didn't happen, so this is how I trade with levels, not candles. Because if you see a tick, emotionally we were programmed to respond one way or another. Oh my God, oh my God. Then if you knew the level, it's like, okay, that's a big fat one, but still within my ranges. So now logic kicks in a little bit to offset some of that. We all feel it. It's there, but it would keep me from doing the wrong thing if I had conviction with my levels. Okay, so now I was watching it all day, so I found the levels. This is a 1 minute chart. I don't like to trade this fast, but this presents a great lesson for watching levels, not ticks. Nick signing out.